let's first, you have my questions or don't you? Oh, you don't? Oh, what's wrong with them? Oh, okay. Well, it looks like we might have lost the file. We overrode it. So if any of our panelists have the questions that I'm supposed to have, oh, they have the wrong ones too. So she's telling me that you guys have the wrong ones as well. So we're going to let this be an interactive one. The reason why I came up with this panel is because I was invited to moderate a panel in New York City with a lot of high-level investors, and they wanted me to be able to be a moderator. And so one of the questions we had was about this topic of self-management versus third-party management. And when we had this discussion, it allowed me to kind of see some of the different nuances that people think about when it comes to the differences between third party and self-management. So I'm going to ask a couple of the speakers here. We should have them. So Anthony Chara should be joining us shortly. I think I promoted him. So let me just double check this. Promote to panelist. He will be rejoining the webinar as a panelist. Good. So he should be joining us here shortly as well. And then we'll go ahead and get started. So as most of you know, what I like to do with these panels is I like them to be interactive. And so those of you who are on watching us live, I want you to be ready to ask questions, okay? So we have the Q&A box, the questions and answers box. And in that box, I want you to ask any questions. And since we had originally created some questions and somehow they got lost in the interweb, we are going to be doing this off the cuff. And so we have the first question that I always like to have everybody get started with is talking a little bit about yourself and your background and where you are right now as it relates to the multifamily space. And in addition to that, I'd like for you to try to tell the listeners where you're coming from as far as the management side of things, whether you're doing more self-management or you're doing more third-party management, but don't explain why yet. So we'll get to kind of the whys behind what you do later on, but really just kind of giving us a little bit of a background about yourself. So looks like we might be having a little bit of difficulty getting Anthony Chara promoted here, but we'll work on doing that. And Craig Haskell might be having a video issue problem. There should be, Craig, on your screen, there should be a little button next to the mute button or whatever, the microphone button that says start video. You can click on that button and it should be able to start the video. Can I hear you? Can you go ahead and speak and see if I can hear you?
Yeah, can you hear me?
Yes.
Okay, great. I clicked that button down when you're saying it, the button doesn't go away. The red line doesn't go away.
That's interesting. Well, at least we can hear you at the very least. So we'll see if we can get the video going while you're talking and things like that. But we'll go ahead and get started. Does that sound good?
Sounds good.
All right. So I'm going to, I see the people on my screen and I also know that Craig, you're there. And so I'm going to call your name and you just have to remember who is before you. So you know who to go after, right? And what I'd like for us to first do is go around the room and each one of you, again, describe your background and your story and how you got into multifamily and then telling us what you do for management, whether it be self or third party. But again, don't explain the why. So Tom, I'm going to have you kick us off and you get us started. Then we'll go to Wanda and then Andrew and then George and then Craig. I'll have you go after George. And then when Anthony joins us here, he will go after Craig. So Tom, go ahead and take us away.
All right. Very happy to be here amongst a bunch of heavyweights. I think I'm on this panel to represent the little guy. I've recently, in the last few years gotten started. You can see by my gray hair, I'm a little bit late to the game. I'm still a W-2 earner, but had been interested in getting into real estate for years. I started looking at multifamily, had a residential broker set me up with a MLS feed. And, I was looking for maybe a duplex or a fourplex 3 or 4 years ago. And 2 weeks later, this 13 unit that's about a mile from my house came on the market. So I jumped in and bought that thing pretty quickly. And my goal really was to self-manage for about a year and just to learn that side. That was 3 years ago, and I'm still self-managed.
This is Wanda Stewart. I have been in the multifamily space for a while. I started in single family, so I had a pretty nice single family portfolio, tended to invest in active adult communities as well as middle class communities. And similar, my hair is gray, so I'm getting close to retirement. And so my focus is to, find my next passion, which has been multifamily. I own a little over 150 units. Most of the acquisitions have been with friends and family, and I've syndicated. I've done some small syndications, but this year my goal is to kind of ramp it up and move from that the W-2 space into multifamily permanently.
Hey, how you doing? This is Andy Jarrett. I just want to thank Dan and team for having us on here. This is a great event, and very happy to be part of it. I'm the founder and CEO of Jarrett Capital, and I currently live in Orlando, Florida. I've been a full-time investor for over 12 years. I've owned other businesses as well during that time. I started out flipping single-family homes, and then started buying small multifamily properties around 2009 in Western New York, which is where I grew up. And currently I have around 220 units in that market, which amount to about 116 individual properties. One time I had over 300 units there, but we have begun to sell off up there. And I've always self-managed those since I started acquiring them. We've got a great in-house team there, built it from the ground up, trained it myself, and they're running the properties there. And I'm also a general partner on 3 syndications, and it's right around 550 units, I believe, total on the syndications.
Hi, everyone. My name is Jorge Abreu. I'm a managing partner of Elevate, and I've been in real estate investing for about 14 years now, full-time. About 3 years back, started getting into multifamily. So before it was mostly single family and some smaller multifamily. I now have under management about a little bit over 1,700 units. And we've got another 850 units under contract. For the most part, we've done third-party management. However, on my last 2 syndications, we've partnered with another GP that has it in-house. Yeah.
All right, Kirk, I think you're next on this.
Yeah, I thought the picture I was waiting for the picture to change. Hello, everybody out there in real estate land. MMFINERS, FMIRES. So, guys, I've been in the business for over 35 years, and I've seen a lot. And I started out as a commercial real estate broker back in early 80s, 82, 83, I think 83. And I focused on office and I focused on retail and a little bit of multifamily. And I did that for a while. I started my own company, property management company, and a brokerage company. And I saw the RTC days coming. I learned most of the business from other syndicators that I was managing properties for. And so I learned the business. We saw the RTC days coming. Properties were cheap. I went out to Phoenix. We bought about 1,500 units. We made about 6 times our money. So that's how I got started in the syndication business. I've done a lot of consulting for big Wall Street guys and helped them with their properties. I'm getting ready to look at the real estate cycles. And I think we're going to be in a down cycle here, but sometime in the middle to end of next year, could be longer. I don't know. We'll see. So I'm going to set up my team to take advantage of this good buying opportunity. So that's what I'm up to, and I look forward to helping you guys and helping serve you any way I can.
Hey everybody, my name is Anthony Chara. Dan, thanks for having me on. I started investing back in 1993. I also want to apologize if it might be a little noisy in the background here. I'm actually sitting at the airport. This same weekend, Jeffrey Taylor with Mr. Landlord does a big retreat, so I'm actually down at the airport in Cabo. But I currently own a little over 500 units, and since 2005, I've been involved in projects, good and bad, totaling a little over 2,000 units. And I do still manage some of my own single-family homes, but I have professional managers in place for all of the apartment complexes.
Well, one of the topics that we're going to have, Anthony, I was actually just thinking about you earlier today, because one of the things that I do in the middle of some of these talks that we're having during the session is I'll sometimes brainstorm with my staff about what's the next event's panel topic is going to be. And one of the things we're going to be talking about at the June summit is the differences and the nuances between doing a fund structure, like an open fund model, versus doing deal by deal raises. And so I know you have some experience with that. And so I'm going to reach out to you afterwards to have you come be a part of that panel as well, coming up in June.
Yep, that sounds great.
So make sure you mark your calendars. And I love it, because there's some people like giving you all kinds of excuses as to why they won't be able to show up for an event like this and speak. And you're sitting there in the airport in Cabo, and you're able to get up on there and probably broadcast from your phone or the Wi-Fi on the airport to come and present to us. So I really appreciate that.
You're welcome. Yeah, it was a challenge because when I first got on, the internet was coming on and dropping off. So hopefully it'll stay on now that it is on, since I'm here.
Well, at least we'll know if it drops off, and hopefully you can jump back on in between the different talks and things like that. So one of the things that I want to ask you guys to do is I have found some of our chicken scratch notes. We have some notes that we sit down and come up with these. So you guys didn't get the proper questions, but I'm going to pose a couple of questions to you and have you go around and answer these. So
hey Dan,
yes.
This is Craig. I think that we got to contrast. Either you're going to manage it yourself, or you're going to have third party. People really don't know what property management is. They don't really understand what property managers go through. So I thought if you don't mind, I got a few things that are tasks of property management companies that they do. So if this is things you can't do, you got to really question whether you want to manage yourself. So I've got, is this all right if I do this?
Yeah, because one of the things I'm going to have us go around, and you can start us off, Craig, is I want you guys to discuss what you do yourself. And you already mentioned that, but also tell us why you choose to do what you do. So if you choose to do self-management or third party, and Craig, if you want to get us started, you can kind of go through that list of things there, and then we can kind of go from there.
We'll do. So if you think about it, property management is not an easy business. There's a lot going on right there. It's like the blocking and tackling down in the turns in the football field. And there's a lot. You're running a business here. You're not running an investment. If you run it like an investment, you're going to run it at the ground. You got to run it like a business. So some of the things that these, property managers, they're running a property management business. Some of the tasks they go through are they're handling maintenance issues around the clock. Right? That's a lot of work right there. They're paying the bills and they're creating financials. They're collecting rents and other miscellaneous income like RUBS or pet fees or late fees or whatever. They got putting together budgets and making sure they're staying on budget. I sat down and wrote this out yesterday thinking about what they do. So if I missed something, I'm sorry. Conducting market surveys, going out and studying the competition and getting an update on what the rents are doing. How's the property looking? Unit inspections, planning, marketing. You got to market to get new leases. You got to go through the evictions. Leasing, right? You got to lease a new space. You got to train new people. You got to oversee capital improvement projects. You got to oversee the running of the ship. And there's a lot that goes into that, a lot of work. And if you don't have any experience in some of this stuff, you got to really think about giving it to a property management company. And when you learn this stuff, you can take it over. So there you go.
So let's go back from that same list from before, from Tom, and have you get started and kind of answering that question as to, which option you choose, self-management or third party, and then why you choose to do that.
Yeah, I'm in a fairly rural town in East Tennessee. So I evaluated the property management options that I had that I was able to find in my town. And there were guys working off of spreadsheets, which there's nothing wrong with that. But, having people bring cash to a central location, I was really wanting to take a more high-tech approach and, you know, at least use as many online tools as I could use. So, you know, and for the reason I wanted to do it for the first year of owning the property was just to try to learn that. When I went in the Marine Corps many years ago, first I went in as an enlisted person, but eventually wanted to be an officer, but I'd always heard, you know, best officers were enlisted people first. Kind of like same thing in the apartment. I felt like if I didn't really learn that side of the business, how am I going to really know how to hire or how to direct or to know even if they're doing a good job? So that's kind of how I got into it. It was a steep learning curve. I really didn't know what I was doing. Luckily, after buying it, I discovered a lot of podcasts, started reading a lot of books, and I've been going to school for the last 3 years. And, you know, thank goodness there's a lot of great resources out there. And, you know, I was able to learn and I've been able to then go in and make some of the changes. And, you know, it was a significant value add. This was a classic mom and pop property. If anybody listened to Gino Barbaro earlier today, you know, that's kind of one of their specialties is finding these mom and pops. And this one was, you know, had to kind of clean house. And it was a steep learning curve, and I'm ready to turn it over to a property management company. The good news is I found one, and I'm currently in the process of transitioning that because my ultimate goal is to, you know, replace my W-2 income and scale my multifamily business.
I think I'm next. So with me, I do all third-party property management. My first acquisition, I did self-manage for 2.5 years, and I did that because in the market that I was in, I had to. I really wanted to understand kind of how other property managers were working, as well as I purchased that first property from an older gentleman who really wasn't keeping up the property. So I knew there were changes I needed to go in there and make. Plus, I had my eyes on other properties in that neighborhood. So I found out one of the best ways to kind of understand who your neighbors were, who owned the surrounding properties, was to kind of self-manage for the first couple of years. Really get in there, really understand whether there was a difference between single family and multifamily, understand what I was looking for, because I can be a little anal, I guess. I like to see the details. And so I really needed to understand what I wanted from my property management company before turning it over. So right now, everything is third-party property management company, and I actually manage them because I really don't want to manage people. Right now in my current occupation, I manage people and projects, and I prefer to manage the projects and not the people. So I don't think I'll ever go back to self-managing.
I pretty much self-manage. I've been self-managing since about 2009. My first property started out small. You know, so for me, self-management is, you know, not only less expensive, but it also, you know, adds more to my bottom line. I can get, you know, I can push to get the units running faster, more control over expenses, and I don't take any fees or, you know, paycheck out of the management. So the only overhead I really have is our full-time employees and my fiance, who handles the phone, you know, the phone systems. So for me, you know, the management rate is much less than a third party would charge. And also, you know, with third party, they only get paid, you know, based on the revenue collected. So I don't really feel there's an incentive there for them to control the expenses. You know, whereas with me, you know, I only make money based on the revenue that I bring in minus expenses. So I feel like I have a lot more control over that doing my own management.
Okay, sorry about that. Took me a second to unmute. So I started with using third-party management, and you know, it's been a work in progress on those, and a lot of the same issues you hear from other groups that are using third-party management is the transparency, the control. We've put a lot of systems in place to work with the third party management and keep a close eye on them, and just making sure that they're doing the things that they're acting quickly when there's issues. And then on our last 3 syndications, we've brought in a co-GP, another group, into the deals, and they have, it's not your smaller self-managing. It's in a sense a third-party management, but in-house. And that has definitely given us more control and transparency.
Okay, this is Craig Haskell here. Can't get the video going. So I started off with self-management because I knew I had a management company. I knew how to manage their properties. But one of the mistakes I made was I got so involved with the management, I wasn't out buying new deals. So that was a learning lesson for me. And these days, if you're going to go into another marketplace that you don't really know, it's probably a good idea to have a third-party management, because they know the knowledge, they have the local resources. It's easy to raise rents. So, but in the meantime, I do think the best way to go, if you know how to manage properties, is self-managed, because you do have the control. You can raise rents whenever you want to do. You have some skin in the game, right? So I really think it's that if you know what you're doing and you can bring people in that are good people, that self-managed would be the way to go. And I hear this thing about cost less, right? And I say, wow, because you saw all the things or heard all the things that property managers go through. There's a lot of work involved. So if you're not paying yourself some kind of fee to do that work, you're missing out. So that's my story.
Just like Anthony might have dropped off for this question here. We do have a couple of questions that have come in from the audience, and I want to encourage the audience that if you have some questions, feel free to type them into the chat box there. This is the time for you to be interactive with this panel and get them to answer some questions that maybe you've been thinking about, or if you're somebody that's thinking about a question, you're thinking maybe that's a stupid question. Don't think that, because there's probably somebody else that's thinking it, but just doesn't want to type it in that chat box or in that Q&A box. So go ahead and do that now. This next question is coming in from Theodore. How do you find the best property manager for your project? Any tips and tricks on what to look out for? So Craig, I'm going to turn it over to you first to have you get us started to answer that question. And then anybody else on the panel that wants to chime in can certainly do that after Craig. Go ahead, Craig.
Well, I've always said hiring people is a process, not an event, which means you got to be always looking for managers, right? So when you need one, you got one, versus all of a sudden you need a manager. And that's what we found is we go out and steal managers. Hate to say that, but we'll go to different properties that we really like the manager and offer them a job. So that's what we do.
Well, for me, I think it depends on at what stage you are with your property. So on acquisition, depending on the location of the property, we try to hold on to the existing property manager if they are a good property manager. So I mean, we go out and we kind of look at their historical success, what other properties they're managing, talk to some of the tenants who are pretty bold about even taking a tour of their other properties to see how they're managed. And we even ask for references. So that is also another good way to find out who owns properties that this other property management company manages. If it's a property that's already in place and you're self-managing it, I would say go out and look on apartments.com, find out what other apartments are in your area. Find out who's managing them. You can also do some pretty good research on the internet. Every property management company has a Facebook page. They're out on LinkedIn. See what the tenants are saying. Do some back-end research and just find out. You'll learn a lot, because I've gone to acquire properties and you've seen, of course, the O&Ms rave about the property and how well it's managed. And then you go out and you look at recent comments from tenants, and you see quite a few negative ones. So then, that kind of raises your antenna. So I really think you just need to do back-end homework for yourself.
And one thing I would add is it's just, like building your team, meetups, networking, talking to people who are successful in the marketplace, have multifamily properties, and then getting referrals. That's what I've done now. I've finally gotten a referral, a very highly recommended company that's willing to come. It's about 30 miles outside of the city they're based out of, but they're willing to come out here. And I think that hopefully is going to work out.
Yeah, I would just add, as far as the hands-on management, we only self-manage the properties in Western New York just due to a lack of options there. And I do agree with Craig, you should be paying yourself something. I don't, because, now for the most part, I am hands-off. We have our systems in place, our full-time staff. I do review everything on a daily basis in the morning. We have about an hour meeting, and then I'm done for the day. My main focus is, acquiring large multifamily properties now in different markets. So when we look for third-party management with that, we get referrals from lenders and other owners in the market, and we look for, property managers and owners who manage, or own similar size and class of the property that we're looking at. Lenders are very good. If you think about it, they're typically your biggest investor in the deal. So I don't think that they're going to steer you wrong on their recommendation.
Yeah, we kind of do all of the above. We look for referrals first from other investors in that same area that are having success. And then once we get that, we ask the property managers for references. We call all those references. We definitely want to tour some of their properties that they currently have under management. And then we also want to see what type of reporting they have, what type of financials do they issue, what kind of systems they have in place, and really digging in on the front end. And it's helped.
Generally, when we buy a project, we leave the existing management company in place just because it makes the transition that much easier. But if there's any issues, most of the time we leave that same property manager in place the entire time that we own the property, because they do just fine. But if we are having issues, we'll go out and we'll talk to the local real estate groups to see if they have somebody that they can recommend in that particular area. And then of course we'll go on from there and try and find the best people. Unfortunately, we've had a couple projects where people have stopped. They talk the talk, but they don't walk the walk. They answer all the questions the right way. We hire them. We're going to do. So again, most of our properties, we use the same exact management company the entire time, but occasionally we've had, I think, 2 or 3 properties where we've gone through 2 or 3 property managers over the course of a 3 to 5 year period, trying to find the best one.
This next question's coming in is geared towards George. And I know a couple of you, including Andrew, had also talked about the systems that you have in place. And so the question that Arnold has here is, how George, you get us started, and anybody else that wants to jump in can. What are some of the systems that you put in place to monitor the property management company's performance?
Yeah, so as far as we have weekly calls, we have weekly reports that are sent to us, and those reports, we kind of dictate what goes on those reports. Each property manager will usually have their own type of reporting, but there's certain numbers that we want to see. One, for example, is we want to know how many lease-ready units there are, obviously, but also how long have they been sitting. And that's going to give us an idea of how the leasing is going, and if there's anything we can adjust. It's a lot of adjusting weekly and making sure that the property manager is supplying us what we want, and when they're not, call them out on it. So another example is kind of on that weekly report, it's going to tell us what type of traffic we've had, but it's also going to tell us the sources. So we know, if a lot of stuff is coming from Facebook Marketplace, okay, well, let's put more attention there, and whatnot. I hope that helped.
So Dan, I just found out there's a chat thing here, and I just was looking at it. So when you were saying the question, I didn't hear it. Could you repeat the question, please?
Sure, sure. The question's about the systems that you put in place to monitor the property management company's performance.
Well, okay, this is just like an asset manager who oversees the property management company, and you got to look at. It comes down to leasing, right? That's the name of the game, and you have charts to see what marketing things are they using? Are they flyering the properties around the area? Are they doing advertising in the local community? You know, most apartment renters are within 2 miles. So most of the marketing should be right in that 2 mile range, and you have a full building, assuming you got a good product at your properties. So I think that helps you. I don't know.
Yeah, generally what we're doing is we want to see how many people are coming through the door. So we try and get our property managers to track where they're advertising, and based on that advertising, who's coming in from Craigslist, from apartments.com, newspaper ads, flyers, drive-bys, where are they coming from, to see which one is actually having the best effect in that particular area. And we also want to know that our managers are actually getting feedback from the prospective residents. So if they leave and they don't fill in an application, we ask them to ask the person why. Why are they not interested in filling out an application? Is there something that they didn't like about the property? Are they still just looking around? What did they think of the property? Because you need that feedback. And of course, we've had some managers that we try and get them to do that, and they're like, "Wow, yeah, we don't have time for that." So in that case, we don't have time for you, and we make a change, because you need to be able to monitor that they're actually doing their job to get people through the door in order to rent your units. Because once people are renting your units, the income generally goes up, and a lot of the other issues with cash flow and things like that take care of themselves.
And I was just going to say on my end, I ask for access to the system. So if they're using the AppFolio, there's a way to where they've got reports, and I should be able to log into that system and see, you know, the number of people that are walking through the door, how many people are they looking at for renting the units, you know, how many people are making calls to maintenance, how fast is maintenance being performed, what type of maintenance requests are coming in. So I always ask for back-end access to those systems so I can really sit there and see myself and actually track that. So I don't have to get a weekly report. I just get a monthly report, and then I still go into that system and kind of do a background verification.
So we have another question coming in here. Ben is asking, have you had to fire a property manager? And if so, how did you know it was time to move on? So I don't know any of you who have had to fire one, but I'm sure some of you may have. And it looks like Wanda's unmuted her mic, so she probably has an experience there. So I'll let Wanda get us started. And then anybody else that wants to chime in, you can do that as well.
I have. And so again, it's really just really tracking what that property management company is doing. So this was on a smaller property where the property management company was really the property manager, a maintenance manager, and one contractor that they had. He was a Class A contractor, but of course he contracted all of his work out to subcontractors. So they really didn't have a team in place like some of the other property managers I work with. And so they would always look for individuals to come support some of the maintenance issues that they were having. If I ask a property management company a question and I get a vague answer or they cannot answer it, then I start, my antenna goes up. So I had issues with maintenance, maintenance that I saw being called in twice by tenants. So repeated calls for the same types of issues. So I knew the repairs weren't being done as they should have been. I also saw on some of the bills where I thought the fees were quite high, even for third-party contractors. So I started making calls myself, and or had another person make a call to that contractor as if they were, getting some of the, asking for work to be done just to see what the price range was, and saw that there were hefty fees being added. So at that point in time, I knew it was time for me to cut my ties and move on to another property management company.
I've also had.
Are we still? Sorry, go ahead.
Okay, I was just going to say I've also had to fire third-party management, and it's actually a good example because we talked a lot about how important the leasing is when we're, looking at how the third-party management is performing. But in this case, it was the expenses. We had a budget that we had agreed on. Our group had agreed on with the third-party management, and that was the budget we were going to try to meet. And they were getting nowhere near that with the expenses, and actually had a lot to do with the maintenance. Like Wanda was saying, they were spending way too much on maintenance, and they were doing okay with leasing, but the expenses were killing us. And we ended up, letting them go and bringing in another third-party management. And within a couple months, it was a complete turnaround.
Yeah, we had one that we had to fire. It was actually a pretty easy decision. They were the second manager on one of our properties, and when I was with my student on the call talking to him, we asked him to put together a budget to show us what he thought we would be spending for expenses, and he basically just kind of chuckled and said, "Budget? What do you mean a budget?" We said, "Well, we need to be able to show our investors how we're going to keep everything in line with the expenses." And he kind of chuckled and said, "No, you own the property. When there's something that breaks and it needs to be replaced or repaired, we do that, and then we send you the bill and tell you how much to pay us." And I was like, we literally got off the phone, and I called the student right back up and said, "You start looking for a new manager right now, because this one ain't going to cut it."
Well, definitely, those are some good things to always watch out for, and you usually will know. So if you're asking, what are some things that you will know when you need to switch a property management company out, and that's usually pretty telling. Just like Anthony mentioned there, that it's pretty clear. Like when they start to do something like that, I've always learned, even when hiring people, that it's gonna be very hard to change somebody. It's better to just find somebody else. And that's what you found there as well. Next question I have coming in here is from George. He's asking, do you prefer to keep contractors on staff for repairs or hire out those repairs to a handyman? He's having trouble lately going back and forth with this concept. So who wants to get us started on that one?
I can. Craig here.
All right, go ahead, Craig.
All right. Well, really, contractors are third-party agents. They get paid 1099. And if you got a bigger property, but most of my properties have been bigger, we had on-site staff, a maintenance staff, and they oversaw all the basics turn stuff and the basic repair and maintenance stuff, work orders. But the bigger stuff that are more CapEx or close to CapEx, we'd always vend out for that. We always hire a company to handle the bigger stuff. And our on-site guys would handle the smaller stuff. That's it.
Go ahead, Andrew.
For our in-house stuff, we do everything, large CapEx down to the small daily maintenance. I found we get a much better pricing and everything, just keeping it all in-house. We can get it done faster on our own timeline, and it seemed to work out pretty well for us.
What about you, George? I know you have some thoughts on this.
Yeah, I think it depends on the size of the property. If it's not that large of a property, pretty much try to take care of everything you can without the mechanical, electrical, those kind of items, plumbing. But if it's a little larger, you could get some HVAC technicians or somebody with an apprentice electrical license, and take care of it in-house. The cost will go down, but you need to have a decent sized amount of units.
What about you, Tom? I know you have a smaller number of units, but what are you guys doing right now as far as your repairs and maintenance?
it is close to my house. My wife grew up here. I have a pretty good host of contractors. I've got a good friend of mine who's an AC guy. I've got a general contractor. I've got handymen, and they're pretty reasonable being in a rural area. So that's helpful for this market. It's not necessarily going to help me when I branch out, and but that's pretty much what I do. And typically, like the AC guy I've got, if, he's not a big contractor, he takes a look at it, he can fix a lot of stuff. If he can't, then I step it up and, call in a bigger company. So I've got guys that can do I've got a plumber that can do pretty much anything. So, that it's just a matter of managing those guys to come in. And I guess one thing that's, really important is just, when you turn apartments, is being a little bit proactive about what you do in the turns, changing out older fixtures, changing out items that might leak water, underneath the sink, whatever. If you do that, you're going to get less calls. And that kind of, I guess maybe that's obvious, but, either, on this one that I've got now, I haven't been getting many calls in the last 4 or 5 months. So, we get in there and inspect, and it's probably because we've been doing pretty aggressive turns and trying to keep stuff proactively fixed.
And there is one more thing I could say to that.
Sure.
One issue I have seen is some groups trying to use their on-site maintenance crews to do their CapEx. And I've seen them run into issues where then the work orders start lacking. So I would suggest using an actual GC to come in and do your CapEx and keep your staff doing your work orders and your repairs and maintenance.
Good point there. Next question here is, and I'll open this up to anybody that wants to get it started. And I think that what we've been doing is whoever wants to get started, just unmute your mic. So that's actually been good. I can kind of see who's ready to get going. So do you have any creative deals that you have structured to better align your interests with management companies? Anybody want to take that one? George, I see you unmuted there.
Yeah. Like I mentioned before, our last few syndications, we've partnered with another group that has an in-house property management, and that's kind of given us the edge and the control that we wanted without having to do it ourselves and bring it in-house. We think eventually we'll most likely go down that road, kind of like we also own a construction company. But yeah, that's what we've done.
So this would kind of go into the other point of that question, not necessarily exactly, but another person's asking, if you hire the wrong property management company, what contingencies can you put in place in the contract to replace them? Go ahead, Wanda.
Yeah, within the contract, you should always have kind of outs. Whether it's, as I think George said, there are certain things that you're going to be looking for in a property management company, where, the certain things you're going to be requesting them to do, the budgets, the expenses, your expectations in them maintaining expenses to a certain level. So, it's very similar to any other type of contract. I would say make sure that you've got outs in there. Make sure that they can't hold you to, say, a contract for a year, regardless. And so I would just say think of things that you want to make sure that property management is doing on that property, and making sure that they're controlling for you. Expenses, as I said, is a big one, and that is typically where they can get you, whether it's padding expenses, whether it's just doing too much maintenance, whether it's not doing enough maintenance. And that I found is probably one of the biggest areas where you can put a clause in there that says, if XYZ, they have a month, or you have a month before you can terminate the contract.
That's pretty much a good answer to the question in general, I think. So I don't think we really need any other follow-up on that. One of the other questions that's coming in, I'm going to direct this to Craig to answer this for Carlos. Carlos is asking, for those that are trying to start a property management company, what does it take to get started with your own property management company? Do you first need to be licensed or certified or partner up with an existing company? So Craig, why don't you answer that first? And if anybody else wants to add into that, you can do that as well.
Well, to start a property management company, if you're going to start a third-party management company, you're going to need to be licensed. If you're going to start a property management company and it's owned by the syndication that you're a part of, you don't need a license to manage your properties. But I recommend that I don't think people really realize how important property management is. It is extremely important, and you got to make sure you know what you're doing, right? And I responded to this thing right here, this chat thing, and as a syndicator, you have investors, and those investors are looking to you to hire the best property management company, and maybe you are that person. So you got to make sure that you get the best property management company on your team. Besides, I got one little thing to add. When you go out to get a loan, one of the things they're going to ask for is a resume of a property management company. If you throw up there your resume and it's very, very limited, you're probably going to hurt your ability to get that loan. So there you go, Dan.
Anybody else want to add into that? Okay, good. We'll go to the next question here. For those of you who are self-managing, Ben is asking, how do you find good service people and what systems are you using? So George, how would you take that one first?
How do you find good contractors? Is that
yeah, service people and even property managers for your properties too.
okay? So property managers, we usually reach out. We try to find other investors that have been in that area and are having good success. We reach out to them. Luckily in this industry, everybody's usually pretty helpful. Or we can also reach out to different vendors and ask them as well. Title companies, insurance companies, lenders. Definitely want it to be a referral. That usually turns out to be better. And then as far as contractors, we've had really good luck going to the apartment association and looking at the vendors. And there's usually an apartment association in almost every city.
Good. Next question here is from Mohammed. Have you had more success with big property management companies or smaller to mid-size property management companies? So anybody want to add on to that one? Go ahead, Wanda.
For me, it's really been the smaller to mid-sized property management companies. They seem to have more of a focus on, I guess because the properties are smaller. So they tend to be more personable. The bigger management companies, I've worked with Tallheimer, and they're huge, but you don't get that personal interaction with them. They're a big company, they've got systems, they follow a system, and you can't really pick up the phone and just, talk to them all of the time. But we're a smaller company, you can really sit down and really have coffee with the property manager. If there's a maintenance manager, you can kind of, text them. I've had them on speed dial, and I can just, it's easier for me from an interaction standpoint with the smaller to mid-sized companies.
I would say, Dan, having done both, when you get to the bigger properties, they're more professional. They've gone through training. They got different degrees. That's their business. They're in this business, and you get, sometimes they get lazy, but overall, they're better assets to have on your team.
Yeah, I could just quickly add, just more than anything, be careful with the growth. Like how much has that company grown? And they can start having issues once they hit a growth spurt and kind of, adjusting to that.
All right. So the next question coming in here is from Ben again. He's asking, how do you ensure managers are managing to a pro forma and executing the business plan?
You want someone to jump in?
Sure. Yep. Go
Okay.
ahead.
Well,
Greg.
I would say pro forma is on the front end when you're buying a deal. Budgeting is on the property management side. So you should have a budget prepared when you take over a property, and you're going to have everybody lived and go to the budget and make sure they're staying on budget. And if they're not staying on budget, why? Once a month, you're going to have financials. You're going to get together and you're going to talk about how come we were over budget on this, and you got to keep their feet to the fire.
Yes, I agree with Craig. I mean, one of the key things that you've got to do when you are purchasing a property or even managing a property yourself is making sure that that property management company understands your budget. Sit down with them, show them the budget, ask them, are they sure that they can meet the budget? If they have any questions, what are their questions? What are their issues with your budget? And then there should be a handshake that, they are going to work with you on that budget. And if not, that again raises a red flag.
Yeah, and I would say that's another reason why to get a bigger management company, because the on-site people do the budgets. All you do is go through them and fine tune them.
Andrew, I want to pose a question to you that's coming in from Arnold. He's asking any creative ways on how to incentivize the property managers to keep expenses down and not just top line revenue, like a smaller management fee, but add a bonuses for staying on budget. And I know you're self-managing, so I'd like for you to kind of talk on that as far as what you do to keep your managers motivated. And then if somebody else wants to chime in as well for self or the third party side.
Sure. Well, for me, it's kind of easy because my fiance really manages everything. So she's very incentivized to keep us on budget. For our maintenance personnel, we do bonuses, so every Christmas, if we have a good year, they get a large bonus. And they're very, they watch the costs. We're reviewing, Home Depot. Every month we go through the list, make sure we're getting our discounts at Home Depot and volume pricing. So.
We're talking here, Anthony, about any types of ways to incentivize your property management companies to keep expenses down and not just on the top line revenue, maybe like giving them like a smaller management fee or possibly adding bonuses for staying on budget. Any insights there?
We actually tried doing budgets on one of our properties in Indianapolis, and even with the very generous budgets and bonuses in place, they weren't able to get the occupancy up. It didn't seem to motivate them at all for some reason. One of the things that we're contemplating is actually changing over from only giving the management company's income based on the top line, but actually adjusting it so that they get paid based on the NOI line. Because obviously the NOI line is the one that matters the most, because we've had a few property management companies that think that, hey, it's not our money, so they spend it like crazy. And the next thing you know, we have very little coming through to the NOI. Sometimes we're negative cash flow. So we're trying to see if we can come up with a formula. We've approached a couple managers about it, but they didn't seem to be too excited necessarily. But we are going to start pushing it sometime this year to see if we can get a couple of them to change over, because then they will keep an eye on not only increasing the revenue, but holding the expenses down.
I think if somebody can figure out that piece of it and they started their own third-party management company, they could kill it in the property management space if they actually knew how to manage those properties properly and manage that NOI. Because I've thought about there's been a misalignment of interest when you start to bonus, or not even just bonus, but just to give a percentage of your fees based on the overall collections versus having some sort of like, system in place to make sure that they're monitoring that NOI as well.
I agree.
Yeah. Next question's coming in here from Watson asking, relating to expenses, what's a reasonable range for expenses as a percentage of top line revenue for a mid-sized property, say 120 to 150 doors? I've heard 35 to 45% is reasonable. What say you? So who wants to jump in on that one?
I would say it depends on the market you're in, but in our underwriting for properties that size, we're always running 50% expense ratios.
Yeah, I say it depends also. And if you're going to be in a marketplace where they have hurricanes and your insurance is higher, your price per unit or expenses per unit are going to be higher. So there's other things too, other water issues, other utilities, insurance, and so forth. So yeah, it just depends.
It also depends on the age of the property too. So, I mean, you have to look at your property class.
Right.
So depending on the age, that also adds to expenses. And if it's an older property, so I love historical properties. Of course, they've got to be up to, 2019 standards, but they still have some underlying expenses because they are older properties.
Yep.
So typically 50-55% is more reasonable.
Sorry, Wenda. I would suggest that you don't go in with any preconceived notion of what your expenses should be. It is going to depend, just like everybody else has already given you great advice. It's going to depend on the age of the property, the location, where is the property in the country, the classification, are utilities included or not included? It's all taken into consideration. So what I would recommend is that you go talk to property managers or IREM. IREM is Institute for Real Estate Management. They have locations in every major city around the country, and you can join up with that group, go in and start meeting with them, find people who have information or access to CoStar, and ask those questions. And based on your particular property, the age of the property, the location in the country, ask them what they're typically seeing for expenses on an annual basis for operating expenses on those properties. Because it's going to be all over the gamut. There's some areas of the country where we might be in the low 3,000s per unit per year, and other areas where we might be around 54, 5,500.
I would one more thing I would add to that is looking at deals and analyzing deals. When you get those performers, the sales pitches of the property, you'll start to learn the price per unit, the price per square. You'll start to learn that, but you got to look at deals. You got to look at deals.
Another question coming in here is from Larry. From a cost-effective point of view, how many units do you think would make sense to self-manage, and at what point would you justify hiring a third-party property management company?
For me, my number is one. One of the things that I look at is if you're a real estate investor, you should be investing. If you're managing the property, if you're showing tenants the property, if you're fixing stuff, if you're taking all the phone calls, if you're analyzing the applications, that's not investing. You're being a property manager. So if you have one unit, quite frankly, you should have a property manager. And I've met people who say, well, yeah, but if I hire a property manager, I won't make as much money, or I won't even make any money. In that case, you bought the wrong property. Because if you're a real estate investor, you need to understand your numbers, and the property should cash flow in such a way that it pays a manager to run that property for you, whether it's 1 unit, 10 units, 100 units, 1,000 units.
Go ahead, Tom.
Yeah, I would reiterate that. I mean, I've got a small property, but I also have a double, so it depends on your circumstance. For me, with limited time, I've got a W-2 job currently. So I think it would have made sense for me to do it sooner. And I'm in the process of hiring for a small property, 13 units, because I want to free up my time for my highest and best use of my time to look for the next deal. So, and then, I've heard, I guess if I can envision being perhaps when you own 1,000 units or enough units in a market, then that might be a time to look back at, do you want to potentially do some self-management? Is that something you want to diversify income and break off and create a management company? I mean, that's something that, the Jake and Gino boys do, and some people do too once you get up to a certain level. But for me, I think I have to agree with Anthony. 1, in my case, 13 is the time to change.
Yeah, I would say when I started out, I was trying to do it as cost effective as possible. Which it does take a lot of time to manage your own properties. But once you get to, 100 units, I was able to bring on, full-time maintenance, somebody to answer the phones, and really free up my time. And, I think you need at least 100 units to self-manage, so you're not, wasting your day every day taking phone calls, dealing with maintenance, and just issues where you can't even look at properties to buy.
Yeah, I would just quickly add that I think it depends on your goals and what you're trying to do. We're trying to scale and get a lot of units under management, so we wouldn't even look at something under 100 units. I agree with Andrew. You need to have enough income coming in to ideally at least have a on-site property manager and on-site maintenance, and keep your expenses 50% or below.
Yeah, I would say that
he's the type of person that instead of just buying a small multifamily or just like 150 units, he takes down a 1,275 unit portfolio. He was on our podcast recently talking about that experience of it's a 5-unit, not a 5-unit, but a 5 portfolio property, and took down 1,275 units in one swap. So congrats to that, George.
Thanks, Dan.
Go ahead,
hey,
Craig.
Dan, I thought I'd throw something out there that might help some people. That the rule of thumb is, as far as size of units, 1 maintenance person per 100 units, 1 office person per 100 units. So if you're going to go 500 units, just multiply times 5. So people out there, how do you staff these properties? What's the rule of thumb? So there you go.
Look, going to follow up on that same line of thinking, Craig, that's where you have to ask yourself when you do, 1 for every 100 units. Well, once you get to 101 units, it's technically 2 people on site. So then there's going to be a sweet spot as to the number of units. Like, is it 130, 40, 50,
That's right. You got to be quick and on your feet, decide what you want to do.
Yeah. Next question is coming in from Doster. She's asking, here's my, I wonder if this is a stupid question. So here we go. Is there any realistic advantages to asking a smaller property management company to allow you to become a junior assistant to their current property manager in order to gain firsthand insights to how things should or should not work? Go ahead, Wanda.
I would say no, that is not stupid. That is a quick and easy way to kind of learn the business at, hands-on, especially if they've got openings. I know I've seen smaller property management companies in the Virginia area where they advertise. And so they're not always looking, as Craig says, they don't have to have the certifications, and a lot of them don't have to have the formal education as the larger companies. So they may be able to take you on as a junior assistant, whether it's maintenance, whether it's property management, and just learning. It could be just doing some basic back-end office work, which once you have a lot of the back-end office details with budgets and how the company's working, you're in there. So I would say no. That's definitely not a stupid question.
Good answer to that question. Next question here is going to be from Alejandro. The use of an asset management program, I guess, or software, does it make it easier to get a loan approved, especially if one is inexperienced in multifamily?
I'll take it. No. The answer is no. It's not going to help you. Well, I'm taking up too much space here, so go ahead.
Go ahead.
Go ahead, Craig. Go ahead, Craig.
I already forgot the question. I'm sorry. Go ahead.
The use of an asset management software, does it make it easier to get a loan?
Yeah. So it's not asset management, because asset managers, people that oversee, they're like the owner. You get paid as you watch the insurance, the taxes, how the cash flow is going, what's going on overall in the business. But the property managers on site. I'm sorry, I forgot the question.
The asset
does it make it easier to get a loan?
Yeah, does it make it easier to get a loan? No. It really comes down to the deal. If you get the right lender, matches, because they have acquisition criteria too. They want a certain type of loan. If your acquisition criteria fits theirs and the property fits theirs, it's a good fit. So the answer is no.
Yeah, one of my students years ago, his very first deal down in Dallas, it certainly does help if you have good property management software. It makes it easier on you because you have to collect all that data to know what you're actually getting into. It doesn't necessarily make it easier or harder to get a loan though, because what I was starting to say earlier is one of my students down in Dallas, his very first deal, he bought a property from a lady, I think it was about 48 units. She owned the property for 18 years and she kept meticulous records all on yellow line sheets of paper. And the bank accepted that. As a matter of fact, she kept such good records, the bank lowered their minimum vacancy requirement because she could actually prove that they were less than, I think, 1 or 2% vacancy. And generally what I tell my students is the absolute minimum that banks are going to use is 5%. Well, so he started at 5%. And of course, she argued with him and said, no, it's less than 2. And the bank then actually looked at her records and agreed, and they agreed to lower their underwriting standard for the loan to 3%. So, but it can make it harder though if you have handwritten records, because you never know who's going to potentially mess things up or get creative with the numbers, which can be a problem.
Well, they're going to make their own forecasts. They're going to put together their own spreadsheets underwriting to see if it fits their deal. So that's why I say no. It'll help them, like you said. It'll help them understand what's going on.
Okay, let's see here. We have another question coming in here. Let me get this. This is from Nick. It's a little bit of a lengthy one, so stay with me. My property management company managed my 24 units. They had a bad property manager who rented out a 100 unit less than what we had agreed to, and that guy has been fired, but they didn't do a reimbursement to me. Also, they made mistake about giving back security deposit to the tenant who owed a big balance, but the owner helped with my renovation in several parts without charging me. Have you met this before? I feel a little bit confused. What should I do? Should it be more regulated or more freestyle with the property management companies?
Freestyle, just let them do whatever the hell they want to do. No, I'm kidding. So it really comes down to what's in your contract with the management company. Obviously, if they committed fraud and they stole money from you and you can prove it, that's different than them just making a mistake. If they accidentally gave a tenant back their deposit when they shouldn't have, and that's really what happened, and they did it by accident because maybe they mixed it up, I don't necessarily believe there's anything that you can do to go back against them other than just voicing your concern. And it sounds like the property manager did try and help make up for it by doing the renovations without charging for it. So you really have to go back to your lease to find out, or not your lease, but your contract with your management company to see specifically what it says and what you can hold them liable for.
100% agree.
Go ahead, George.
Yeah, I would just say get everything in writing. And the contract that your property manager is going to give you, it's all negotiable. I mean, you don't have to sign what the contract says. And yeah.
So the next question in here is coming from Alejandro again, and he's asking, assuming the deal works, what if one hires a property management company, a property manager company? Does that make it easier for an inexperienced investor to get a loan?
Depends on how deep that investor's pockets are. There are some lenders out there that if you have very deep pockets, they don't care if you have any experience or not, because if the property fails, they're just going to go reach into your pockets to get the deficiency. Other lenders are very, very much where experience is a factor, and they're either going to require the credit partner or somebody else to be on the team. But it all comes down to what I call the golden rule. It's he who has the gold makes the rules. So don't expect that one lender is going to tell you one thing and that all the lenders do the same thing. We've had lenders tell us in one case that maybe you didn't need to have any experience, and then a week before closing, oh, well, we have this other gap over here, so you need to bring somebody else in to fill this gap. And we've been working on this loan for 30, 45, 60 days, and all of a sudden they drop it on us at the last second. So rules change, lenders change. I do believe that if you're inexperienced, it's going to help you. Even if the bank doesn't require you to have an experienced partner, you really should have an experienced partner anyway, because you don't want to learn the hard way.
Another question I'd like to kind of pose to the panel, and anybody can jump in as well, is what size property do you think is the most difficult to manage?
For me, I would say the smaller properties. And again, that goes back to when you've got a smaller property, you typically don't have, as what Craig said, a professional top end management company. So you've got a lot of smaller management companies that are using third party contractors. And so they may be switching out contractors. They may not always be using the same contractors. And they may actually have a hard time finding contractors to support some of the work on your property. So, and they may not also have the big systems in place.
I think everybody would probably consensus is that correct?
Yep.
Any other thoughts on that, Andrew?
I agree that smaller properties, especially most difficult to manage. We see more turnover and maintenance issues in our 2 to 3 units as well. And you have to think too, if you have a large capital event, with a small property, say an HVAC system goes, I mean, your profit for the year, could be paid up in that.
So I have another question coming in here from Watson. Is there a good online resource for property management best practices that we should know of? I interviewed a small property management company earlier this year, and besides the 10%, I was also made aware that I'd be responsible for the cost of repairs. Again, something that, as experienced investors, we might realize that that's kind of a chuckling kind of statement. We're like, well, of course you're going to be responsible for repairs, but somebody who's getting started in the space and that's new, it's one of those things that, they might not think that the 10% doesn't include those repairs. So what would do you guys have any online resources or anything like that you can point to that would give somebody some insights on some of those best practices?
Well, I think George mentioned one. Apartment management associations, they're in at least every state. That would be a great resource for you. And they particularly focus on property management because you even if you're a small guy, for example, in Virginia, if you're a small person, you have the opportunity to listen and understand from some of the larger property management owners and companies. And so you can go to monthly meetings. You can also, they've got events where they talk about property management. They've got lists of contractors. They usually have directories that have reputable management companies and contractors in there. So I think that would be an ideal resource for you.
And as you were talking there, Wanda, I went ahead and found the book that I believe it's Bigger Pockets that wrote this book. Somebody had Bigger Pockets on the book on managing rental properties. So it'd be a good kind of introductory resource for you. Not too expensive. You can grab it there on Amazon. I put it in the chat box for everybody. So that'd be a good one to kind of reach out to. Well, we are coming up against the clock here. So I really appreciate each one of you joining us today for this panel. And you've provided some really good insights. And I know our attendees have really appreciated it. And again, thank you so much for being here. And for those of you who want to reach out to our panelists, if our panelists would like to go ahead and type into the chat box your contact information, how they can reach out to you, follow you, or maybe get some more information from you, that way they can go ahead and have that in the chat box there. Just make sure you change it from all panelists to all panelists and attendees. So you can go ahead and do that now. And definitely appreciate each one of you being here. And hope you have a good rest of your weekend. And again, thanks for taking some time out of your schedule on this busy Saturday afternoon.
Thanks, Dan. It's been
Thanks,
great.
Dan.
Thank you, Dan.
Thanks, Dan. Really great.
Appreciate it.
Take care.
Thank you.
Great summit.
Awesome. Thanks, Tom. Let me get a few things set up here before we go into our break. There we go. Perfect. All right. So we are now in our break. This is now the break. The next session that's going to be coming up is going to be the last session of the day, last session of the summit. And so we have I call it the ending keynote, if you will. And then we've invited Brian Burke to come on and speak on thriving in an uncertain market. So make sure that you don't miss that session, because I invited him specifically to come and speak on that topic for us as we're closing out the summit for the January 2020 summit. So while we